Hi everyone, welcome back to my channel. Today I will talk about something very different. Yet again, if you notice the trend, some of the real estate agents in Singapore has been talking about it before already. It is none other than our core central region properties. And in fact, today's title would be Core Central Properties Explode in Value in the Next Decade. Let's deep dive a bit to have a bit more clarity on the core central region properties. I will bring about certain topics that are mind-blocking for some consumers when I talk to them about moving into CCR, what are some of the issues of the CCR projects, and then moving forward, what are the changes that are likely to happen, and how this leads, in my opinion, to why developers are bullish to actually take on 4 plots at the Great Wall, how probably they look at it, and then after that we summarize and look at the overall prospect of CCR in the next 10 years. Because anyway, we buy real estate, most important is not now but down the future. You might want to stay for a long time, and then after that the value also increase along the way. Let's deep dive now and see what's going to change for CCR properties. Today's content we'll talk about is, as I mentioned, issues with CCR properties. Number 2, residential analysis by nationality. This thing is very important, I feel, because I personally, when you look at the profitability rates of OCR and RCR and tie into the residential analysis, which means the nationality profile, you can see how come some condos have better holding power, have better profitability rates as compared to CCR, for instance. And then number 3, we're going to talk about is a narrowing price gap of CCR and the rest of Singapore. As the price converges for CCR towards OCR and RCR, or rather the other way around, RCR, OCR converge towards CCR, what does it mean for you as a buyer, as an upgrader, for instance? Okay, then number 4 we're going to talk about is why 4 big developers, namely we have Guacoland, we have All Green, we have CDL, and also Wing Tai, come in onto Great Wall and focus their resources into this area. 4 plots that are going to launch subsequently July onwards towards end of the year. So what is the charm over there? And then of course, next is what if CCR price quantum is comparable to the RCR and maybe OCR. So this one you must stay tuned. I did some price projection of what could be the launch price for certain CCR projects that's coming together with harmonization, and how they actually is very close to being transacted in the OCR and RCR in the previous launches. Okay, and then of course I'll come up with my summary. Also, if you like my content and you want to follow me for more CCR content down the road in the next few months, click on subscribe. If not, help me like or share this video with someone or a friend that's looking to move towards core central region in Singapore. Number 1, issues with existing CCR properties. As you easily can search, you just need to click into Google top loss-making condominiums. We see in April 2025, this is on 99 Co, if I don't remember wrongly. You can see Ritz-Carlton, Orchard Residence, Marina Bay Suites, you have Twin Peak, you have the Resell, Marina 1, OUE Twin Peak. Out of the 9 or 10 of them, most of them are core central projects. If you look at the other side on Stack Homes, thanks for allowing me to have this screenshot, Stack Home. You can see also those in the CCR area, Treetop, Seascape, Helios, the Scotts Tower. So why is this situation happening? This is what my analysis is. I come out with 2 main reasons, 2 main attributes. Number 1, we look at is what I mentioned earlier. Point number 2, residential analysis by nationality. Nationality profile by residential status. If you look at most of our CCR properties back then when they buy it maybe 15 years ago, 18 years ago, a lot of foreigners actually come in to purchase our core central properties. Basically because I'm sure these are very astute people, rich people, they won't buy housing area. They for sure might buy into RCR, but for sure they'll focus their firepower into a core central region, especially at the point of time when there is no ABSD involved. So it's very easy for them to buy in and park some of their funds, some of their wealth over in Singapore. And to tie into this, I also learned from one of my clients also, because he's doing this higher net worth, right? He shared with me is that sometimes because they understand that Singapore has a safe haven, currency is strong, so they don't mind parking some of their wealth over here as a hedge against their own home currency. And even if they sell back the same price or just with marginal profit, they can still take advantage of the currency, exchange back to their home currency and gain another few $1 million from it. So I think in such a sense, foreign purchases back then without ABSD, especially without ABSD, they are not so painful when it involves letting go back just at a slight premium or back into the same price they bought in a few $1 million 10 or 15 years ago. And because of such a thing, that's why the unprofitability profile is significantly higher. So if you can see, when I talk about higher foreigner percentage, we're talking easily about 30 to 50%, that kind of quantum within a condo itself. And if you notice, number 4 we have is a Scotts Tower with a high percentage of 58.6 number of foreigners in the condo. You can see that the non-profitable transaction shoots up to 93.33%. So there's 93.33 transactions that are non-profitable. But of course, not necessary. Just to clarify also, or just to be on a balance point, of course, if you look at OUE Twin Peak, if you look at the sale, there's higher percentage of Singaporeans, 53% and 63% respectively. Yet the unprofitability profile is also on the slightly higher side. OUE Twin Peak is particularly high, 92%, whereas for the sale, it is 39%. So I also have deep dive in the next point that draws into why OUE Twin Peak might not have such a good profitability outcome. So later if you follow me through, you can see on the next portion. Comparatively, if you look at those recently TOP projects that are near to town area or within town area, like One Pearl Bank, like Irwell Hill, okay, they have a high percentage of Singaporeans, very low percentage, 6% and 8% of foreigners. You can see that the profitability is very high, 92%, and the profitability is 100% for Irwell Hill residents. Just to give it a bit more justification on my take of why higher percentage of foreigners might result in the condos having high non-profitability. Okay, this can be a good comparison if you look at OCR and RCR. Everybody knows our OCR, RCR prices are very resilient, profitability is very strong, there's almost zero non-profitable transactions, and this is basically because if you look at our profile of people staying there, they are 80% to 76% of Singaporeans, 15%, 12%, 8% of PRs, and they are here to buy to stay. So this also comes in with another concept of owner-occupied, with high local profiles, PR profiles, with owner-occupied mindset. So henceforth, profitability within the condo would be definitely higher as shown in OCR and RCR. Okay, so this is my take on why CCR projects having not so fantastic kind of results in the past 10 to 15 years. Not saying that it is bad for foreigners to come in to buy our properties, definitely not going to that direction. But of course, having said that, when they buy a property in Singapore, if their involvement is to park a certain amount of wealth, when they need it for certain business purposes, they have to liquidate, they have to bring out the money, they have to use it for other purpose, and henceforth, they might sell at a different price or a slightly unprofitable price. Unprofitable price could also means that they make a bit of profit from their buy-in price, but then versus the current value, it seems unprofitable. Okay, so how to avoid this? I think the government has been doing quite a good job. Not because after election I say this, but because nowadays we have a 65% ABSD. So this 65% ABSD on any purchase price given 2 million is a big amount of money, $1.2 million. So this actually sort of impedes the foreign purchasers, not just from coming in, but yes, you can come in and buy, but then if they were to sell it back to the same price, I think they will feel a very big pinch as compared to 15, 18 years ago when there is no such a regulation. Okay, so this is how I look at it. Moving on, the second point that I want to mention is traditional non-functional layouts of the CCR projects in the past. Okay, so if we were to deep dive, just now I mentioned, let's analyze a bit of OUE Twin Peak. If you look at the layout, this is what I have on the screen. Okay, it's a 1055 square feet 2-bedroom, not a 3-bedroom. Okay, so 1055 square feet is usually a 3-bedroom or 3 premium kind of layout, but in OUE Twin Peak, it's a very, very big 2-bedroom. And if you look this, for a very, very big 2-bedrooms, okay, I zoom in, this is the entrance. Straight away, it's an open concept kitchen. How I wish they actually close this up and do an enclosable kitchen, because however it is, when unit size are very big, we are in the Asian environment, People still like to have an enclosed kitchen. They still like to do their cookings. If they want to have a family time, they want to have people coming over. Okay, and then coming over to the living area, you can see that there is rather a very long balcony. And next to the balcony is something that is not so popular nowadays. It's called a planter. Okay, so this takes up space as well. This is where I attribute to a non-functional layout. If you follow me through to bedroom number 2, another issue is the bedroom number 2 can only seems to fit a single bed, and it comes with bay window. So this is a bit of a issue, I believe, for people that goes into CCR property. Maybe it's a couple, maybe it's a couple with one kid. They will expect one of the bedroom to be sizable given the 1055 square feet, but in the end it turns out otherwise. Okay, and you need to do certain alterations like removing this wall next to the living room just to extend the room out a bit to make it look a bit bigger. Alternatively, if you move forward with me to the master room, you can see that there is also bay window. Likely at the back of the bed head of the mattress is also a bay window. And if you follow me through to the master room, it is a bathtub configuration, which is not very popular nowadays and takes up excessive space, making the bathroom unnecessarily huge. Okay, so this is what I say. 1055 square feet, 2 bedroom, very fantastic, sounds very nice, but actually when you look at it, the layout might not be that acceptable, and henceforth maybe that is why owners there find it a bit hard to let go. When it's hard to let go, the only thing that can entice buyer to come in is to adjust something what we call the price. And henceforth, I think this is where non-profitable transactions start to appear, because each owner starts to transact a bit lesser and then way below what they have bought, so on and so forth. Because sometimes I encountered a owner recently also, the family is growing, they bought in when they are a couple, but the family is growing, they have one kid and they're planning for another kid, they need a helper, and this configuration size sounds like can fit the family, but actually the layout can't fit the family at all. And henceforth, this is one of the reasons I believe why OUE Twin Peaks might not be doing so well. And also, if you look at the 1 bedroom, very nice size, 549 square feet, very comfortable, but yet when you come in, you see, and once you enter the unit, you face the living room, you face the master room, there is no division of space at all. It is super studio. I think I will call it as that. Kitchen is open concept, and then there's also another access door at the end which is next to the kitchen, which is a bit weird, but anyway. So the kitchen is open concept. There is no differentiating in terms of space, which singles, some couples may prefer to have a bit of privacy when they are serving their guests. They don't want them to see the living room, so on, master room, so on and so forth. Okay, and you enter the balcony, there's also some what I call the planter, which is also a bit on the not so functional side. If you can actually have the balcony and the planter together, I think that space might be more usable. Okay, so this is what some of the older layouts made it a bit more unappealing for people to come into the CCR properties back in the past. Okay, so if we were to look at the next other comparable in terms of non-functional layout, I think is One Marina Residences. Okay, so this is one of the projects that's very new in town area. Okay, connected by at least 3 MRT lines, yet it doesn't show very good profitability. And one of the attributes I think is still back to the layout, because if you look at this bedroom 1 type 1A, just type 1A, we have 689 square feet, we have 764 square feet, we also have just bedroom type 1A, we have 689 square feet, 700 square feet, 710 square feet, 721 square feet, 732 square feet, 743 square feet, 753 square feet, 764 square feet. Just for this single type of bedroom, there is 1, 2, 3, 4, 5, 6, 7, 8 different kind of sizes for the same kind of layout. How does that make sense to you if you are a buyer? You can't even tell the much of a difference between, maybe you say the 700 and 721, you go and see, I bet you'll be a bit lost. How come this size is supposed to be a bit bigger, but then I don't feel that where is it bigger? Okay, it could also attribute from the way the balcony is being slanted, and because the building has a slanted or curvature, so that is also why the size is a bit different. And this is, I think, a bit of an unappealing kind of layout. And when it comes to resale transaction, prices become an issue, because maybe the 7641 is the same price as the 6891 because the owner might want to sell, but then they have no choice but to sell at the 689 pricing, and henceforth when the 689 price and the 768 price, of course PSF drops, valuation there seems to drop, non-profitability outcome, non-profitable transaction comes about. So next is also the sale. Okay, a very classic first mover in CBD area. This layout is also not as attractive because the master room is being divided by 2 sliding doors over here. Okay, also with a planter and a bay window. And henceforth, maybe that is why it is not getting any traction. But I feel that the sale, not to buyers because I stay here, is getting a bit more attention nowadays because of the quantum acceptability within the one bedroom prices. I believe it will gradually move out of this non-profitable transaction angle into more profitable transactions down the road. These are my two main reasons when it comes to why CCR projects, or this is the issue for CCR properties in the past few years. Okay, number one, of course, is what I mentioned, maybe too many foreigners involved in the condo, owning the condo itself. And number two is also the layouts that are being tried by the developers back then are not functional, and then too big a space, and it doesn't really fit some of the needs of the homeowners, resulting in existing owners to have to sell at a bit cheaper prices so as to offload the product. And as everyone starts to sell a bit cheaper, then henceforth non-profitable transactions come about. Okay, so this is how I look at it, but things are different nowadays. Later part, I'll explain to you how things are different in terms of as our real estate matures, URA put in place certain requirements, and the latest requirements is harmonization of the GFA, and I think that is an excellent strategy from the government to the consumers, because this will help to ensure that the layouts are a lot more functional, are a lot more usable, and are more appealing to buyers, which I will discuss about it later part. Next, let's look at the narrowing price gap between CCR and rest of Singapore, and what does it mean for you. I believe you search this on Google, it is very common. You can see it on social media. A couple of agents have been talking about it, because right now where we are, 2025, okay, this is generated in the May 2025. You can see blue is the CCR, yellow is RCR, and orange is OCR. You can see that the gap between the RCR and CCR is getting very much smaller, and even for OCR to CCR is also getting smaller. This is in comparison. If you take 10 years ago, you can see that there is a bigger gap between OCR and CCR and the RCR. Okay, and what does this mean for consumers, and what does it mean for upgraders? Let's look at 2015. When you are a OCR owner, you are in the housing area, you actually thought, maybe you want to move towards River Valley, you want to move towards CBD, you want to give it a try. But then when you look at the price difference in PSF, your house could be sold at 1,033 per square feet. But to buy into the CCR properties, it is 2,100 per square feet. This means that there is a price difference of 1,000 to 1,200 per square feet on average. And hence, this means that for every 1,000 square feet of 3-bedroom to upgrade to, are having to top up $1 million to $1.2 million after selling my place. As a OCR owner, as any housing owner, I think the straight away reply is, bro, siao, you're crazy, I'll not do it. Almost double the amount that I sold my place for. No way, I probably won't, unless you are doing a business, unless your career is flying high at that point of time. Very rarely, they might look for alternative, like in the landed segment back then in 2015 or 2014, rather than going to core central region. But in today's sentiments, in today's context, 2025, the price difference dropped to $700 per square feet. To upgrade to a 3-bedroom, 1,000 square feet for as a reference, the price difference becomes 700,000 difference, way below $1 million, at 30 to 40% reduction in affordability. I use the word affordability. It seems to be a bit more attainable to OCR condo owners, EC upgraders, and maybe even $1 million HDB upgraders. Okay, so this is a bit of a game changer, and this is what I'm trying to share with you. What does it mean for you? If you want to buy into a CCR property, you want to know who can you sell to in the future. And this is what I'm trying to say are your target audience that you can resell to in the future. Once their property is mature, they want to move on to this better location. Scale back a bit. Okay, back in 2015, just now I have mentioned, one thing I also realized is we must actually be a bit realistic about the size of a 3-bedroom back then in 2015 or even 2010 for a CCR property. I think on average is about 1,800 square feet, that kind of size. It's a very big 3-bedroom. And henceforth, it is not just doubling the price for OCR condo owners to come into, but maybe 1.5 times the price, because at 1,800 size, you are looking at actual price to be 3.8 million back then in 2015. This kind of hefty price tag is very turn off for this group of owners, okay, for this group of OCR owners. Whereas in today's context, with harmonization, with more efficient use of land, without all the non-functional features of the house, the actual size of a 3-bedroom is around 1,000 square feet, which means to say if the PSF is around 2,950, we are looking at around $2.9 million. It's way cheaper than compared to 2015, and it's way more attainable if the OCR owner can sell their property for around 1.6 or even 1.7 or even 1.8 million, and down the road even $2 million. To them, CCR should not be that much of an unaffordable kind of consideration. Okay, so this is where I look at the OCR perspective. How about RCR owners? People that are already living just on the city fringe. Back in 2015, if you ask them to upgrade, it is not difficult. It is probably 500 to 700,000 more for them to consider. Then again, now in 2025, it is less than half. 200,000 more, maybe you can get a CCR project. So this kind of price reduction and improvement in affordability, I believe, will actually bring on more people to come and look at the CCR properties down the road in the next decade. So to summarize what I have mentioned in this narrowing of price gap, number one, easier for OCR, RCR owners to consider to upgrade to a CCR property, and there will be a higher probability because the price quantum difference is getting smaller and smaller. Possibility number two of $1 million HDB owners to also upgrade towards the CCR area, because right now where they are staying is all in the city fringe. They could be coming from Boon Keng, they could be coming from Dawson, they could be coming from Red Hill. Once they sold their house for 1.2 million, 1.3 million, up to 1.4 million, for them to look for a next better alternative, a bit of elevated living, naturally they will look into what can I get at the core central region. Next, number three, very important, with more of this kind of profiles coming in, owner-occupied profiles, Singaporeans, PRs coming in, I believe that there will be a better holding power for the condo itself, and hence this will mitigate the bad impression or the lousy impression that CCR properties in the past 15 years has not been doing well. This results in better profitability data of CCR properties, and henceforth allowing a return of demand into the core central region down the road in the next 10 years. Say for instance, anyone that buy in this year, 5 years later they sell it for a profit, people can see that actually it makes sense because it is not a lousy project. People make money from it. That is where things will turn around. As per how OCR properties are and RCR properties are, they have such a good record, good traction, and therefore people are more confident to buy into it. And I believe that when you look at it in totality, CCR properties likely to move up in value in the next decade. I would like to share why 4 big developers will focus their resources in Great World. What is so special about Great World? Consider roughly a CCR neighborhood, okay, along River Valley, next to Singapore River, right next to Robertson Quay. So why did 4 developers focus their resources? Okay, so this stems from my experience in the past 9 years of doing this work, observing buying patterns of homeowners in the past few years. They always ask me these same few questions. Gary, I want it near MRT. I want it near cheap amenities. That means you have hawker, kopitiam, you have your wet market. I want near shopping mall. I want to be near primary school. I want to, is that possible to have a HDB upgraders around this area? I want to have a good size plot, around 500 units. I don't want too small a condo. Bonus if you can give me near some natural park lah, some playground, so on and so forth. So this is the buying pattern of the homeowners for the past few years. Do you see that it actually can fit into what Great World can offer in today's market? I believe the developer got think of this before they started bidding, and then there's 4 plots coming up. Does Great World Precinct tick most of the boxes above? Great World MRT? Yes. Havelock Thomson East Line? Yes. Near cheap amenities? Yes, we have the Zion Market. If you don't want, you can go slightly down to Biocrest. Over there, along Havelock area, there's also more affordable amenities. Near shopping mall, Great World Mall, upgraded version. Near primary school, in fact, it is near within 1 kilometer to 2 primary schools, River Valley Primary School and Alexandra Primary School. HDB upgraders, yes, down along Havelock Hill. If you Google BTO, there is upcoming new BTO. If not, your BTO will come from Boon Tiong, which is in Tiong Bahru. If not, they'll come from Red Hill. If not, they'll come from Dawson. And then next is a good size plot. Yes, most of them yield about 500 or more units, 700 units possible. Okay, near park playground for sure, because you are living literally walking distance to Singapore River. You can have a night stroll towards Robertson Quay. Funny, I hear one of the agents saying that if you drank too much, you can walk back from Clarke Quay all the way back home. Having said that, Great World Precinct can tick up to 6 or 7 of the requirements that most of the homeowners buying pattern has been for the last 5 to 6 years, right? Also, I feel that it gives an elevated lifestyle next to Singapore River along Robertson Quay. Is it a true upgrade of property type and also the living? I think this is the key thing that I want to share with most people also. Not just you elevate your asset value by coming into CCR, you're also elevating your whole lifestyle. Okay, and to sum it up, we don't know what is going to happen in the future. Of course, as property prices go up steadily and gradually, your asset value increase. That's the best. Alternatively, you are not worse off. You are still living in a better environment, closer to your workplace possibly, a neighborhood that has more lifestyle, that has more things. So you are actually literally upgrading, not just in terms of asset but in terms of lifestyle. That's what I'm trying to share with you when I look at how developers have this totality thinking of trying to go into here, develop a few more condos, and henceforth will have this kind of target audience. In short, this is why I feel 4 big developers focus their resources on Great World itself. Next up, I think this is also one of the very interesting segment if you have followed me through my whole discussion on CCR properties issues, what's gonna change. And today, what if I say that CCR new condo quantum is comparable to RCR or even some of the transacted in the OCR. Let's have a look and focus on this. Okay, so focusing on Great World new condo launches, not the current existing resale because they are very big, their quantums are flying very high, easily $4-5 million. Okay, and assuming their launch prices, I give a benchmark. If you want to find out about how I look at the launch prices, you might want to tune back into my Irwell Hill discussion on my 4th video, if I'm not wrong, 3rd or 4th video, that I talk a bit about Zion Plot A, Plot B. I'm sure having watched my video, you have already done some research about River Valley Parcel A and also River Valley Parcel C and what kind of launch prices. I put a estimated minimum, estimated maximum. I would use Lentor Central unit size as my benchmark for the size of the units, because I feel that Lentor Central, the developer, has done very well in terms of creating efficient and sought after layouts, and henceforth that is why their project was sold, I think, more than 80%, close to 90%, or even more than 90% on day one. And if you want to find out about the layout discussion, you can look at my Lentor Central video as well, probably 3 videos before this. Okay, so if we look at this, dive into it, I have the different bedroom types 1, 2, 3, and 4. Okay, not sure if they are doing 5 bedrooms. If we look at the sizes that I detect for them, assumingly, a very common post harmonization size for 1 bedroom is 484 square feet. Okay, a common 2-bed, 2-bath layout post harmonized is 678 square feet. 3 bedroom is around 915. It could be smaller at 860 for ORI if you want to take that into consideration. And 4 bedroom, something comfortable to stay with a yard and a utility, is 1184 square feet. Okay, I also did the calculations for pre-harmonized, so you can see that these are sizes that are very common in the current resale market. I set the price range lower spectrum being 2,850. Okay, because some of them they already bought in a very low land bids, 1,003, 1,004 PPR, and then I set the upper limit at around 3,200 PSF as price gradually stage upwards. I will be surprised, definitely will reach 3,200, because example Mayor Blue has already done at 3,200 PSF. Okay, on launch day. Okay, so having this consideration in mind, you can look at, for example, the 1 bedroom. I have a price range of $1.4 to $1.72 million based on the PSF that I have detect. And if you look at the right side, ORI, which is a new launch in Toa Payoh RCR, is launched in January 2025. They have already transacted at 1.461 accepted, transacted before. So that's why I would say that, in fact, the price quantum he's probably accepted and transacted in RCR before already. And what does this mean for you as consumer? Nowadays, this means that you're paying similar or maybe slightly more, and you get to stay in core central region of Singapore. Isn't that fantastic, eh? Okay, so next is 2 bedrooms. The range could be 1.9 to 2.1 million dollars, of which, if we look at last November through to December, Chuan Park in Serangoon, Lorong Chuan area has already transacted 2 bedrooms at 1.988, close to $2 million. And this 2 bedroom size, if I'm not wrong, is a 743 kind of layout, which is very similar to post-harmonized 678 2-bed 2-bathroom. And in Ori, it has also transacted at 1.934 for similar layouts, which means to say you are paying OCR price, but you are staying in core central region. High chance possible. But what does it also means is that whose risk is higher? Now I stay in more central part of Singapore, I'm paying the same price as people staying outskirts of Singapore. In the resale market, if you were to look at it, some buyers were to go and zoom into their price budget, they will also realize that I can pay the same price and I can stay in town and it's nearer to my workplace. And it's also near a mall, equally near the MRT, Thomson East Line, that can get me anywhere around Singapore. Even so, all the way to the east side, obviously. Why not consider? These are little kind of considerations that I always share with my buyers down the road. What should we be looking at? And then what are the future exit strategies that we can consider? Okay, interestingly, I would like to point out is the 3 bedroom and 4 bedroom, okay, because those are the housing type units. They are going to transact possibly at 2.6 to even 2.9 million dollars, and this is not unseen transactions in Chuan Park, 2.6 for a 3 bedroom, and in Ori, a smaller unit at 2.4, close to 2.5 million dollars. And finally, of course, the 4 bedrooms, they could go for 3.3 to 3.7 million dollars, which at Chuan Park it has been transacted at 3.5, almost 3.6 million dollars. And of course, Ori 3.3 to 3.4 million dollars have been transacted before. So what does this mean is, it is very interesting how the government brings about these few points together to allow such a price range to happen. Number one, post-harmonization, which means only charge the net usable space. Number two, also the acceptable land bids, because in River Valley, in Zion land parcels, there is also a service apartment that developers have to commit to build into their condominiums, and henceforth the land bid prices are a bit more flexible to take into account of the risk of the service apartment to yield down the road. And henceforth, with such a savings, consumers or home buyers have a better choice, and this indirectly also probably part of the government's direction, maybe to bring about demand back into the core central region, particularly if you look at it, Great Wall area, because the Thomson East Line is ready. They want to have more footfall for people using the MRT lines, and also of course to divert people out from OCR, RCR, so that OCR, RCR prices will not be a tip over versus core central region, which would be a bit strange for any cities that you lived in. Okay, so this is how I see possible of a CCR new condo price quantum. If you want to have a discussion on this topic, more than happy to assist you in, of course, to qualify your upgrading journey. If you were to consider other than where you are currently staying, or other than RCR, can we consider to move into CCR? What are the things to take note of? And of course, which plot to consider and which plot will have the best outcome down in the future. More than happy to discuss with any of my viewers on this new trajectory down the road for Singapore real estate. Okay, finally, let's look at summary. Is it the rise of a sleeping giant? Because CCR has been very quiet, has been doesn't have very good impression for a lot of Singaporean homeowners. Okay, but then number one, it could be a game changer for CCR new condos to have affordability that can match up to that of RCR and some of the OCR new properties. So henceforth, when these new property TOPs, when they start to put up in the resale market, we can see the difference. While RCR asking the same price or just slightly 100k more, I can top up and I can move into central part of Singapore with an elevated lifestyle. You know, that kind of lure, I think is it can be irresistible lah for some of the homeowners. And of course, having considered that it is still within kilometer to Alexandra Primary School and River Valley Primary School, you're not saying that you're not in an area that has no convenience for your kids to get around or for their education. Okay, number 2, easier for upgraders to consider with a narrowed price gap, as I have mentioned midway through this video. Near MRT, near the mall, near workplace, near primary schools, unchanged but elevated living in CCR, particularly along River Valley, right outside Great Wall MRT station, or alternatively Havelock MRT station. Number 4, to achieve price profit stability with more Singaporeans and PR and owner-occupied profile coming in gradually into this CCR new condos. Okay, number 5, higher additional buyer stamp duty ABSD for foreigner purchase to ensure, this is my opinion, to ensure they hold on to Singapore property longer, because they are easily coming in at 65% ABSD. That is for every $1 million is 650,000, $2 million is $1.3 million, $4 million is $2.6 million. Their total buy-in price is $6.6 million. I think they will definitely want to hold it for a longer term and not throw money anywhere else. And also, they might not want to consider coming in the nutshell. If not, with all these points, that is why I feel that if not, why would 4 developers be into the same precinct Great Wall? They could have chose not to enter into the scene, because having to develop a piece of land, having to come up with all the, I was looking through the tender documents, having to come up with all the plans, it's not no easy feat. For sure, they must have seen some potential in that area, and henceforth, I believe this is what consumers, if we think ahead, if we look ahead, we can spot some opportunities. Okay, so this is the end of my CCR properties. Could it explode in value down the road? I hope so. If not, stay tuned. See you in my next video. Look forward to see everyone. Thank you. Bye bye.